Hello and welcome to Property Hotline on India's first property channel, Magicbricks Now. I'm Kavita Krishnan, and today we are answering all your questions related to home finance. So if you have any question, feel free to contact us. Our expert for the day is Harsh Roongta. Harsh is a chartered accountant and a SEBI registered investment advisor. Harsh, welcome to the show.
It's a real pleasure, Kavita.
Let's start with an email query. Probir Kumar Datta has written in and he says that his friend applied to LIC Housing for a home loan of 12 lakh rupees to purchase a newly built up flat in Howrah in West Bengal. Now all the process are almost complete. He's received loan approval via SMS. However, LIC Housing is now telling him to assign an LIC policy or to find a guarantor on his behalf, which means he has to buy the policy. He wants to know whether this is mandatory. Is there any statutory guideline or rule from the RBI or any concerned authority on the same? You know, this is something, Harsh, that a lot of banks and home finance companies have taken to doing. They plug an insurance policy alongside the home loan. Now, you can't dispute the importance of the insurance policy over here, but do you need to take it from that very same company?
Yeah, so I think excellent point that you make there, Kavita. I think three things. First, I think just for the benefit of Prabir and all other viewers who are watching this, there are two regulators in the housing finance industry. When banks lend money to you, the regulator is RBI. When the housing finance companies lend money to you, which means HDFC Limited, LIC Housing Finance, Dewan Housing Finance, a lot of others, the regulator is National Housing Bank or NHB. The regulations are more or less similar between what RBI and NHB has, more or less. Let's come straight to the point that Prabir has raised. No, regulations don't require that you have to have an insurance policy when you take a home loan, but it is open to the banks to make it mandatory. And that's the reason for that, as you have yourself mentioned, is very simple. What happens to the bank's loan should something happen to the borrower during the loan term? If the borrower dies during the loan term, the loan is likely to default because the family may not be in a position to pay. So I think it is in the borrower's interest as well as the bank's interest that a policy should be taken, a life insurance policy should be taken, I think, and they can make it mandatory. The question is, what they can't make mandatory is they try and push a policy, a favorite policy from a favored provider. Typically that policy tends to be more expensive or it tends to be an unsuitable policy. You are not forced to buy the same policy. However, it is in your own interest that you take a term policy. If you take it from LIC, in this particular case, which is what they are favoring, the advantage is that the premium that you pay, the one-time premium that you pay for that policy can be funded as a loan so that effectively the premium is also paid along with the EMIs. So it is convenient, though it might be expensive. So that, but take a policy. That I think is something that's quite essential.
Right. So key takeaway coming for all you viewers there right on the top of the show. If you are in the market for a home loan, if you're looking to borrow a loan for a home, remember that you need not buy the policy that the bank or the housing finance company is selling to you. It is not mandatory. However, it is advisable for you to buy a policy. You can opt for a term policy of your choice. You need not buy it from the bank or the housing finance company that you're taking the loan from. You can exercise your choice in this matter as well, right? Moving on, we have Jigar Soni now, who's called in from Borivali, Mumbai. Jigar, how can we help you?
Yeah, good evening, sir. My name is Jigar Soni from Borivali, Mumbai.
Yes,
my
Jigar.
question is, I plan to purchase a 2.5 BHK at Borivali West. The cost of the apartment is 1.95 crores. That's only the flat itself. However, after adding other costs like 2 car parks at 10 each, plus 20 plus flat registration fees, plus service tax, and plus club membership and amenities, with 2 years advance maintenance, the total cost, which developers call it package price or box price, works out to around 2.45 crores. Although I'm eligible for full loan amount, my question is whether I will be funded at 75 to 80% on flat cost only or on box price. I have already considered my margin money share of 20 to 25% on my purchase price. In case if I'm not being funded on other expenses charged by the developers, a few of my friends have suggested to make a separate agreement on rupees 500 stamp paper for furniture and interiors, which can be funded by the lending institution. But that may attract a VAT at 8 to 15%, which may prove costly. I request you to please advise me on the above issue, please.
That's a great question, Jigar, and that's something that every borrower should, ideally know before going in for that home loan. Harsh, what does the typical home loan cover?
So first, Jigar, let me give you the regulations. Whether you are taking it from a housing finance company or a bank, if the clear regulation is 75% of the agreement value is covered. So that would effectively mean 75% of 1.8 crores that you mentioned. And I'm assuming your income is enough to take care of any loan that you might be sanctioned. There are several gray areas in the query that you have raised. One, I believe that most banks will fund you for the car parkings that you're going to pay for the club memberships as well, as long as it is part of the agreement. So I think you will be able to get much more than 75% of 180. Clearly, stamp duty and registration they can't take into account. They're not allowed to take into account. There are several workarounds to what you are wanting. A maximum loan of 75% of 2.4 is what I think what you are looking at. I suggest that you look at, please consult professionals who are very active in the mortgage area. There are ways by which good borrowers will be able to get the loan that they want without having to incur the costs that you are talking about. I mean, you just mentioned one via media of making it as a furnitures and fixtures, etc. There are other options. You may be able to get unsecured loans. If you have some other security, you can get a loan against that, which is equivalent, etc. There are several ways in which the objective that you seek to achieve can be achieved at a very reasonable cost. So I think seek advice, and you should be in a position to get that.
Right. So go ahead, do your homework. There are a lot of professionals in the market who will give you that kind of advice. But having said that, you are eligible for much more than a 1.8 crore loan. Essentially, a bank will lend to you against the agreement, the amount mentioned in the agreement, whatever is the agreement value of the flat. And typically that includes costs like car parking, it includes costs like club membership, etc. So you need to really go through your agreement, see what is included in that, and then go and apply for a home loan. Get that breakup. Your developer will definitely, gladly give you that breakup if you ask them for it. Right. And before we move on, Harsh, there's something else I wanted to ask you about. You spoke about a credit-worthy borrower and how they can up their chance of getting a home loan. Now, I know that there is, I believe the Bank of Baroda has recently come out in the market saying that they are willing to lend keeping in mind the CIBIL score. So essentially the rate of interest at which you get your loan will be determined by how good or how bad your CIBIL score is. Could you break that down a little for our viewers? What will this also impact the loan amount that you are capable of getting?
See, logically, so far, the credit score that you have, if you have a high credit score, it means that you have ease in getting the loan. I'm talking in response to home loans. In respect of home loans, what a good credit score helps you do is that you are able to get a loan easily, which also means that if there is some amount of flexibility available to the bank in terms of quantum of the loan, they will be more flexible, clearly. As of now, on home loans itself, there is very little change in the actual interest rate that will happen. The change that you are speaking about primarily impacts unsecured personal loans. In unsecured personal loans, the rate can be very, very different depending on your credit score and other manner in which your credit is assessed by the lender.
Okay, so as of now, you're saying it will only affect a personal loan. It is not going to affect your home loan.
There won't be any serious impact on your home loans. It might be, if at all it is there, it's very low.
Yeah, but having said that, what is a good credit score?
Any credit score above 750 out of 900, I think that's a pretty good score.
anything above 750 out of 900, and this is something that you can check for yourself. You can go online and you can go onto the SEBI website. SEBI, in fact, is one of the largest credit score agencies in the country, and you can go there and you can apply for the score, right? And you should be getting your score.
You can
online
get
as well.
it. You can get it online by paying 550 rupees.
Right. So that's all about your credit score over there. And now a question that's coming on our website, www.mpnow.in. Ashish Kapoor says that his maid wants to buy a house far in the suburbs of Mumbai. She wants to take a home loan for the same. She requires a loan of 2 lakh rupees out of the total property value of 3.5 lakh rupees. Obviously, she is a non-formal worker, doesn't have proof to establish credit history and ITR. However, she has a bank account and a PAN card. He wants to know if any banks or NBFCs give loans to low-income groups. Additionally, do they give home loans or mortgage loans, and is a guarantor required? Now, that's a very, very interesting question, and that's a very, it's that kind of question where you really hope that there is some solution over there for his maid. She's trying to buy a house, build an asset. And I know there are quite a few micro housing finance companies in the market. Will they help her?
Absolutely, Kavita. So I think this is what makes this profession worthwhile. I mean, we talk all the while about fulfilling people's dreams, and you imagine the dream that a maid has to buy her own house. So clearly, the good news is that there are micro housing finance companies out there who will be willing to do this even without the formal proof of income that a maid is obviously not going to have. I mean, some names that you will probably be seeing on your screen, whether it is Magma, AU, Mass, Equitas, MHFC, Aptus, Shubham, India Shelter, Home First. There are quite a few of them, right? The other good news is that a lot of them have schemes whereby the employer whose credit is good, if he stands as a guarantor, the maid will be in a easier position to get a loan. Just one word of warning, however, I think the key issue in this segment really is the legality of the house that you are buying. So I don't know which city this is in, but you can't really think of a legal house. Forget a legal house. I can't even think of an illegal house that you can buy for 3.5 lakhs in Bombay. So this obviously is not a query from Bombay. But typically the issue that comes is that how legal is the house that you are buying?
Harsh, the question is from Mumbai. Ashish Kapoor does live in Mumbai.
Oh.
And his maid is in fact looking for a home in the suburbs of Mumbai. But also tell me this. Now, you said that, a lot of these companies would be glad to lend if the employer is willing to stand guarantor. Now, what does that essentially entail? And I think that is something that, Ashish is probably also wanting to know about. Because if he's written and asked you this question, he probably wants to help her along a little as well.
So, being a guarantor is as good as taking the loan yourself and giving it to her. So, just remember that the only advantage is by doing it through this route, if you give her the loan yourself, then getting repayment, etc., becomes an hassle. Here, there is a clear relationship between the housing finance company and the maid, and they will follow up with her for the repayment. There is more responsibility to make the payment on time, and it's not linked to her contractual relationship with you. So I think that is the good point. But please be, please be aware.
What is the fallout? What is the fallout?
The fallout is if she defaults, you will have to pay that loan. So very clearly the fallout can be quite serious. So do this only if you are wanting to help her and really are sure that she will be able to repay that loan.
Having said that, Ashish, I can tell you one thing. I have been speaking to the management of these companies for quite a few years, and I can tell you this, that all these companies will typically tell you that their NPAs are among the lowest in the business. In fact, most of them report zero NPAs from this particular section of society because they take their loans, they take their liabilities very, very, very seriously, and they want to finish it as soon as possible. Right? With that, let's move on.
I think the defaults are really meant for the large borrowers, the famous borrowers all of us know about.
Right. And that's housing for all for you. Let's move on and take an email query now. Anshu Thomas says that she plans to buy an apartment in Abu Dhabi. So now she's an Indian citizen, lives and works in Mumbai. Will she get a loan to purchase property abroad? If so, what are the criteria she needs to meet? And before you answer this question, Harsh, I also have a question to you. If I'm buying a property abroad, doesn't it make sense for me to borrow abroad rather than, borrow in India and pay for it abroad, because then you are essentially getting into hedging, foreign exchange, etc. and all of that?
So the only issue with that, Kavita, is that Indian residents are not allowed to borrow abroad. So you have to seek RBI permission before you will borrow abroad. There are workarounds around that, which I would not advise unless the amounts are pretty large. So you can set up a company abroad and invest money in it allowed, and that company can buy the house and get a loan. So I think not advisable. The costs are very high. Unless the amounts are large, you don't really want to do that. But to answer her other question, can she get a loan here in India? Advisability or not otherwise, but can she get a loan here in India to buy a house abroad? A home loan, no. No home loan lender will give you a loan here for a property against security of a property overseas. So that you can't get. What you can get are the regular loans here. So if you have a property here that is free, you can get a loan against property, and that comes pretty cheap nowadays. I mean, it is about 10.2, anywhere between 10 to 10.5% if you have got good credit. You can take regular personal loans if you have got good credit. Again, that rate can range between 11 to 21%. You are allowed to take loans here against property or assets here or unsecured here. You can remit, each person can remit up to $2.5 lakh, roughly 1.7 crore abroad. You can't borrow abroad except through the
This remittance is on a yearly basis. That
on every year. So 1.7 crores every year.
So if she were to, take a loan and buy the property abroad, typically then she can only remit part of the cost of that property abroad. I mean, I'm guessing that if, say, it is more than 1.7 crore, like you said, then she will not be able to make the entire payment in one shot.
She can use her husband, even a one-day-old child can remit 1.7 crore abroad. So, I mean, that limit is per person per year.
Right. So, Anshu Thomas, that's your answer there. Doesn't make sense for you to actually go ahead and borrow abroad. You can take a loan over here. It won't be a home loan. No bank will be willing to give you a home loan, but you could take a loan against property or a personal loan and buy property abroad. However, you do need to plan your finances. You need to plan those payments, because there is a cap on how much money you can remit abroad within one year. There is a basic amount that you can remit per person per year. So you need to keep that in mind when you're buying property abroad. Facebook query next. Vishwajit Kamal wants to know if he can claim home loan processing fee and fee charged by banks for reduction of home loan interest in his home loan interest component while claiming income tax rebate. That's an Indian mindset for you. We want a rebate on everything. Can we claim deductions on all of that?
Well, the good news on that, Kavita, is yes, you can claim a deduction on that. If you look at the definition of interest in the Income Tax Act that's given in Section 2, subsection 28A, interest includes any fee paid to the lender in respect of the monies borrowed. This is clearly fees paid for in respect of monies borrowed. So yes, the answer is you can claim it it is just like any other interest. The home loan interest plus the fee is interest.
Right, Vishwajit. So clearly you've done your homework and then you've sent in that question. So yes, you can get deduction on that as well. Website query coming in. Rohan Hande says that he's paid over 1.5 lakh rupees as interest on his home loan. He wants to know how he can maximize tax benefits on the loan. Can you maximize tax benefits?
It's a strange question, because I mean, it depends on, first of all, what is the property being used. If it is rented out, there is no limit on the deduction for interest. From the rent, you can get total amount of interest that you have paid, and if that results into a loss, that you can adjust it against any other source of income.
Could you break that down, Harsh? Because typically when we say something like this, it sounds like you're reaching for the moon when you say that there is no limit. What does it mean?
It
say
means there
I'm
is-
getting 20,000 rupees per month as rent on the property.
Right.
What does that mean?
So if you're getting say 20,000 rupees per month on the property as rent, that means in a year you're getting 2,40,000. Now there is a deduction, 30% standard deduction is available. So 72,000 rupees, 30% is allowed as a standard deduction, which means the taxable rental is 240 minus 72, which is about 1,68,000. Now let's assume that the property, there is a loan of crore on this, 1 crore on this property, and that you have paid about 8 lakhs as interest on this for this year. The entire 8 lakhs is deductible. So the rental, taxable rental is 168 minus 8 lakhs, which means you have a loss of 6 lakhs 32,000. You can set that off entirely against your salary income, and TDS will be deducted accordingly from your salary income. If you are self-employed, you can adjust it against your business income. That's what I mean by unlimited. Entire 8 lakhs will be allowed as a deduction.
So essentially, whatever, though you have to pay income tax on the rentals that you will get on rented out property, you can use it to completely set off the tax that you pay on your income. That is what Harsh is essentially trying to tell you. But also you need to remember that before you set out to claim tax deduction, you need to be very clear as to whether your property is rented out or whether it is self-occupied. On self-occupied, you will not get these benefits. You will just get the standard benefits that you get on a home loan. And those benefits are up on your screen. Up to 2 lakh on interest repayment, 1.5 lakh rupees is a deduction that you can claim. On principal repayment, if you have a home loan on self-occupied property. Also remember, you can only avail this deduction if you have got possession of that property, which means after the OC is given, once you've got conveyance, that is when you can actually claim all these deductions, right? With that, let's move on. We have an email query now. Ashish Shah writes in, says he owns 2 houses, out of which one is rented out, the other is self-occupied. He's servicing a home loan for his second home and avails a tax deduction of 1.5 lakh rupees on the interest paid. Will he be able to get a higher tax benefit if he rents out both his houses? We've partly answered the question, but can he rent out both homes and claim a higher tax deduction?
So let me repeat this, right? If your house is rented out, there is no limit on the deduction. And obviously, we live in a free country. You can have as many houses as you can possibly pay for. And if all of them are rented out, then and if there is a loan on each of those houses,
so there is no cap on that?
There is absolutely no cap on that. Some people are incredulous about that. So that is the reason I'm taking so much trouble to answer that. If both houses are rented out, if you have a loan on both houses, rental is taxable, 70% of the rent is taxable, minus the entire interest without any limit on the loan. And if that results in a loss, you can set it off against your salary or business income, whatever you have.
Right. So all the more reason for you to invest in property. From a tax perspective, it is a very, very prudent investment. Let's take a question that's coming on Twitter now. Tanvi Shah has tweeted in. She says that she wants to buy a house in an SRA project, that is slum rehabilitation project in Mumbai. Do banks provide a home loan for it? She wants to know.
So it's not very clear what kind of...
There are 2 components to an SRA project.
Exactly.
There is a free sale and a slum rehab component. Right. So say it is the free sale component in which typically people can and are able to buy houses.
Absolutely. The free sale component of a project is like any other project. As long as the construction is underway, the slum dwellers have vacated and they have been resettled, and the free sale work is happening, I'm sure any bank which has sort of looked at that project and is willing to give a loan against it will be able to. It's like any other project at that stage. On the other hand, if she is looking to buy on a property that is part of the slum dweller component, that's not sellable for 10 years. So obviously, you can't get a loan if that is the property that you...
So Tanvi, if you're buying the property from the developer, it is part of the free sale component, then yes, it is eligible for a home loan. You can get a loan on that. With that, we are coming to the end of Property Hotline today. However, let me give you a quick wrap up of our key takeaways. This is what we've learned today. When you are taking a home loan from a bank or a housing finance company, it is not mandatory to buy insurance. You need not buy the policy sold to you by a lender. You can buy an insurance policy from any insurer. It is up to you to choose which insurance policy you want to buy. However, like we keep saying here on Property Hotline, it is advisable to opt for an insurance policy, opt for a term insurance policy along with that home loan so that you secure your repayments of that home loan. That's all the time we have on today's episode of Property Hotline. Harsh Roongta, thank you very much for coming in. And if you have any queries related to real estate, it could be buying, selling, investing in property, it could be legal issues, tax issues related to real estate or home finance, get in touch with us. Country's top experts are sitting on Magicbricks Now, and they are sitting here waiting to answer all your questions. Send us your questions. We will get each and every one of them answered. Thank you very much for tuning in. Keep watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.